It's time now on this Friday for a look at the markets here in Korea and around the world. And for that, we're joined on the line by Dr. Kim Seiwan, professor of economics at Ewha Womans University. Dr. Kim, thanks for coming on.
Good afternoon.
So we have the Iran sanctions, as we just heard, in full force. No more exceptions for the countries that had waivers, like Korea. Some thought that would cause oil prices to spike, but in fact, they went down a fair bit on the first day, lower, in fact, than they've been in a month. Now, yeah.
So oil prices moving against the market's expectation this time, actually. Previously, market expected that oil price increase quickly because the end of Iran sanction waivers would lead to production shortages and push up oil price. But as we saw in the previous report, the oil price has been decreased on a larger scale. So I think it is mostly due to U.S. oil inventory increase, one of the highest level in history. And the Saudi Arabia, the second largest oil producer in the market, a willingness to fill up the blank of the Iran's oil production.
Well, now some data here in Korea, switching gears, showing consumer prices rising rather slowly. They've been rising below 1% for 4 months in a row now. There's some talk about deflation. What do you see in these figures?
So if we take a look at monthly inflation from the beginning of this year, 2019, the monthly inflation is switching between negative 0.5% and positive 0.5%. So in aggregate, for the last 4 months, price increasing rate or inflation would be almost zero. So that fundamentally reflects the weak demands for goods and services through continuing economic downturns. And particularly, as we talked about, the oil price has been decreased seriously in the last 3 months, and the service price decreased together. Actually, deflation itself is not a good sign of the economy as a whole. Of course, it is a good sign for individual workers and individual households, because income is fixed and prices are going down. But as we saw from Japanese economy's case in the last 20 years, deflation causes weaker demands for goods and services because people delay the purchase of goods and services. So to see whether current 0% inflation goes down to deflation, we have to wait until the end of this year, 2019, again.
Got it. Well, another story this week, we have South Korea, China, and Japan agreeing to resist protectionism. Their top economic officials met in Fiji yesterday, and another thing they agreed on there was to reinforce their currency swaps that have been in place for around 9 years now, so they can ride out the tough times. What does it mean to have the Korean won part of this equation?
Actually, between ASEAN and Korea and Korea and China, there are currency swap already. The currency swap size between Korea and ASEAN would be about 40 billion US dollars. And the size of currency swap between China and Korea is about $56 billion from 2017. But the new situation of the intensifying currency swap between ASEAN, China, Japan, and Korea is the possibility of currency swap between Korea and Japan. Actually, currency swap between Japan and Korea has been terminated in 2019 under very difficult situation, I would say, difficult situation between Korea and Japan. So if we can rebuild currency swap between Japan and Korea, that would really help the stability of Korean financial market and Korean economic stability, because Japanese yen is one of the solid safe asset in international financial markets.
Well, they'll be meeting potentially at the G20 meeting coming up in a few weeks. So we'll have to see how that works out. Well, Dr. Kim, we'll have to leave it there. Thanks so much for coming on today and sharing your insights.
Okay, thank you very much.